In this video, I'm sharing with you 5 financial mistakes which, when avoided, will save your future life. And without beating around the bush, let's start with number 1, which is tapping into your retirement fund. Here, you are literally withdrawing money before you hit your retirement age. And this has serious negative consequences, which may include, but not limited to, like imposed taxes and penalties. You may have to incur some income tax whenever you withdraw that certain amount of money you need, and then you face a 10% penalty of withdrawing money at an early age. Then also you are obviously reducing your retirement savings, and that will affect you in the future because as you grow, like, you have less money you're saving. Also, there is a loss on investment potential because you are literally pulling money out of the market, so you miss out on the investment rewards that would otherwise sum up and give you a higher retirement savings. It will be very hard for you to catch up on your retirement savings once you pull out some money from your account, because those of you who have ever used tuition money or school fees to do your stuff, you know how hard it is to repay back that money. I will invite you to subscribe to the channel and please give a like to this video to support this channel. Yes, thank you. Next financial mistake is skipping insurance. This also has serious negative consequences. For example, financial loss. For example, let's say an accident happened and your car crashed, or a fire, or your serious illness. So you have to pull out money to cater for the damages. You may face serious legal issues for the damage of property and life caused to other people by your property or you yourself. And then there's a mistake which people make, that they don't want to do insurance things when they are still young. The problem is that there are some companies that will not offer life insurances when you have a chronic illness. So better do this thing when you're still young and when you're still healthy, and start a little and a little. It's not too late, and you should do it for your children too. By the time such an emergency happens, you will be safe. If you get a chronic disease, you will be safe because you did insure your life when you were still young and still healthy, so you won't miss out on this. Then number 3 is undermining further education. Some people choose to forego this, yet it has serious consequences in the future. For example, you miss out on the career opportunities available there. You won't get the raise because you don't have the skill set and the knowledge required to be in that position. It reduces your innovation, like the innovativeness within you reduces with time because you are not aware of what is out there. It doesn't necessarily mean to go for your MBAs or masters, not really. Sometimes you just have to go for the free courses out there. Like, you do personal research and education from many outsources. It may be about financial education, marketing, or a particular skill within your field that you need, or more knowledge you want about something. Also, that when you don't further your education, it exposes you a lot to unemployment, because over time people are weeding off. Like, if you don't have the skill set required at that period, you will always be in that position. Sometimes you may even be fired because there's someone who has better skills than you. It also creates income inequality among people. So if you have a chance or time, please do and further your education so you don't regret it in the future. Then the next one, I believe it will trigger some people in the comment section how they perceive this, but I believe do it yourself investment is not really a good take. It's good to be in control of your personal investments and finances, like making your investment decisions, because literally you won't regret if at all the decision is yours, or you have less regrets and maybe complaints that maybe so and so did this for me, maybe if it was me. Some people choose to jump into stock investments when they are excited or they have got that basic education about it, and then they think they will make it. When you don't understand investments, that's real gambling, and I wouldn't recommend someone to do this. maybe get a financial advisor. He will help you do the research about the market and the investment. In the end, investment depends on your financial goals, uh, what's your risk tolerance, and then how comfortable you are with your money. So it's all up to you. As long as you make the decisions, you won't regret. But many people prefer hybrid investment, like they work along with their financial advisors, and it's what I would recommend. Lastly is spending too much on buying big expensive house. This will result into higher mortgage payments. Sometimes you run into debts and it will be difficult for you to acquire a loan from banks and sometimes personal loans. Then also there's limited flexibility. Sometimes you reach a moment when you want to get a job you're passionate about, but it gives you less money, but you can't quit your higher paying job to go for the passionate one, because the money from, like, the salary you'll be getting for this low income passionate job will not be enough to keep up with the mortgage expenses. Those are my 5 big financial mistakes you should avoid: tapping into your retirement fund, foregoing further education, buying a big house, and do it yourself investments, and then skipping insurance. These will sure cost you if you don't pay attention to them, but now that you know, at least you make proper decisions. Thank you. Please subscribe. Thank you.